All right, welcome to this weekend market analysis for the 20th of January 2018. Last week was quite a very boring week because price had no directional buyers. Majority of the pairs were flat. Okay, so we were less active as of last week. Even the trades that we forced, most of those aggressive trades, didn't really behave well. Okay, so let's just look into a few pairs ahead of next week, most of them being the New Zealand dollar crosses, just to decide which directional buyers we will be concentrating for next week trading. Okay, well, looking into the Forex factory economical calendar right now, let's see for next week those high impact news announcements that we are expecting to be released in the Forex market. All right, we are now seeing a number of high impact news announcements scheduled for next week. Over the weekend, being today and tomorrow, we do not have any high impact news event taking place. All right, none scheduled here. That means the chances of having weekend gaps is very slim. Okay, it's very slim because there is nothing happening on Sunday and Monday. All right, let's see the other ones. On Monday we have also a free trading day. Okay, sorry, I was talking about Saturday and Sunday. Let me just try to set my calendar again. I didn't really look into Saturday, which is today. Okay, Saturday. Okay. All right, okay, I think I messed up with my calendar. All right, Saturday and Sunday, no high impact news event, so we might not expect to see weekend gaps. Also on Monday there is no high impact news event, no economic event. That means Monday is likely to be a slow market day. It's going to be another slow day, another boring trading day, and whenever the market is slow and very boring, we do not find trading opportunities. Okay, you always want to walk away from very slow market behaviors. You want price to be very active at its best. Okay, all right, let's see other high impact news events for Tuesday, the 23rd of 23rd of January. We have monetary policy statements, Bank of Japan outlook report, Bank of Japan press conference will be holding on Tuesday. So Tuesday is more for the Japanese yen. That means we might be seeing some action across all Japanese yen pairs on Tuesday, as their monetary policy statements, although tentative, might be released into the markets. Okay, then on Wednesday, just normal high impact news events. Okay, these are normal high impact news events. Let's scroll down a bit. On Thursday What do we have? Okay, interest rate. This is a heavy duty one coming from the euro axis. Minimum bid rate. This is interest rate announcement for the euro. This is one of the heavyweight high impact news events that we are expecting for next week on Thursday the 25th of January. You really want to be careful trading all euro crosses as around that news release hour. Okay, interest rates are usually very powerful news events that can spike the market without giving you any time to take any decision. Okay, so interest rate there, these other ones here are quite a normal high impact news events. There will be bank holiday for coming from Australia on Thursday, all day bank holiday, so we might also see another crawling market for Australian dollar crosses on Thursday. Okay, all right, the rest we have speeches here on Friday. Speeches coming from the central bank governors right there. Normal high impact news event. Anyway, it's might also be another boring trading week ahead, but at any rate, we will keep analyzing the markets until we begin to find those valid high quality trading opportunities. All right, let's quickly very quickly look into the charts and analyze those pairs that we are following to see those directional biases for next week. All right, you're now looking into the New Zealand dollar against the American dollar. This is the weekly time frame. I am going to analyze this pair from top to bottom. All right, so that's from all of the pairs we are going to be looking at. We'll be analyzing from the monthly time frame to the 1 hour time frame. Okay, all right, let's get going. The New Zealand dollar against the American dollar, monthly time frame. Price has been in a range. In the monthly time frame, this is what price has been going through. We actually got this sideways price market behavior excuse me, that came to an end. Then we finally entered into this sideways bias. Price does not know where to go to for several months. Okay, this was the kind of market condition that we found ourselves, especially for last year. All right, last year, because if you count 1 2 3 4 5 6 7 8 9 10 11 12, that is last year. The whole of last year's trading, that's it. Price didn't go anywhere, so not much of trading opportunities for the forex traders. Okay, so in the weekly time frame, let's draw those levels of support and resistance. Let's be very specific. We can keep this as an area. All right, so that's an area. That area there, you see how that was the obvious swing high. This one's here fell shy, hitting that previous obvious swing high. The next attempt was a fake breakout of that level. Okay, upon that fake breakout, you can see how price dropped to the downside. Next attempt didn't quite get there, so we will just keep this as an area of what? Weekly resistance. All right, how about to the lower boundary? We got this also acting as an area, more of another fake breakout right there. This is quite difficult to draw if you keep it right here. Okay, this seems more appropriate, so let's keep it there as our area of support. Okay, that touch, this one here, this one here, this one here. So price is in a range in the weekly time frame of the New Zealand dollar against the American dollar. Now in the weekly time frame, what are we looking at? Well, let me zoom in this chart a bit. Okay, just to show you. All right, price took off very nicely from here on. 1 2 3 4 5 6 green candles in a row. 6 green candles in a row without looking backwards. Okay, then we are now seeing last week candle forming like a pin bar in the middle of nowhere. All right, that means price seems to be running out of steam. So if you have been clicking on your buy button around in here, be very careful. There is likely to be some pullbacks to somewhere around in here for price to bounce back up. So this is not the place you want to click on your buy button. It will be a very late entry. So what you need now is a pullback to somewhere in here before you look for your buy entry. This is a sign of exhaustion. Okay, even if you want to connect these highs, this one here, anyway, we will see that in the daily time frame. If you want to do that, let's just move back to the daily time frame. Now that's the line I was talking about. That's the line I was talking about, that bounce. This one here, coming around in here, you need price to make that pullback. Okay, you need price to make that pullback. Even in the daily time frame, you can see that sign of exhaustion. You can see those multiple candles around that area for last week, not knowing what direction they want to take to. If you count for the whole of last week, or for the whole of last week, 1 2 3 4 5 candles. Those 5 candles in a row for last week, flat. Price didn't move to anywhere. That was a sign of indecision. Okay, a sign of exhaustion that, hey, be careful going long at that particular area. Okay, all right. In the 4 hours time frame, we got quite a nice trend, a very nice trend, with price pushing to the upside upon any pullback. But that exhaustion sign that I was talking about is right here. You can see that channel formation. Whenever you get this type of channel, formation, it's a good hint that price will soon be turning to the downside. You can see how price has been swinging. In fact, the last swing didn't take out the previous swing high. So be very careful clicking on your buy button, because the next price behavior is to break, pull back, then begin to fall, collapse to the downside. So be really careful going long there. What we need to see is to wait for the breakout of this channel formation there. Okay, there are different types of channels in an uptrend. If you have price giving you successive swings, then suddenly you find that type of channel. It means it is almost time for price to come back down. In the other hand, if you find this one, okay, price are coming back, swinging to the downside, nice trend, then you find that type of channel. It means it is almost time for price to go back up. Okay, so in this case, New Zealand dollar against the American dollar, it is high time to stop searching for long opportunities. Wait for price to break out of that channel before you want to start searching for trading opportunities. All right, let's move on to the next pair, the euro against the New Zealand dollar. This is another pair that I was actually let me take out this so we can see. You can just see the charts clean and simple. I don't want to overstuff this chart. Okay, let's go to the monthly time frame. I was actually following this pair, looking for a possible long entry, but the market condition for last week was horrible. Okay, it was horrible. This is the euro against the New Zealand dollar for in the monthly time frame. Give me a second. All right, so in the monthly time frame, let's zoom in and see what has been going on. This pair has even tried for the past months, all right, because we have seen price pushing in one direction or the other. Okay, so it has even tried. It's a nice one. We don't want price to be flat. We don't want price moving in sideways direction. So let's say they are nothing really much in the monthly time frame. All we are seeing here is that price is actually going through some rejection in this weekly trend. This trend should be viewed in the weekly time frame. So let's see that. So in the weekly time frame, you can see that swing. That's the first swing up, coming back down, another push, coming back down, somewhere in here for possibly another push. But for the last few weeks, what have we been getting? That sideways price behavior, market confusion, several pin bars at that particular area. 1 2 3 4 5 hesitation candles. Trust me, in this kind of market condition, it is really difficult to make money. It is hard to trade in that type of market condition. It is a low volume market, not suitable for price action traders. Now in the daily time frame, let us try to be precise with this line. Okay, in the daily time frame, this was a falling level of resistance in the daily time frame, this one here. But as you can see, price has messed up that line for last week. In the past 5 days, see what happened. 1 2 3 4 5 trading the euro against the New Zealand dollar. Price went nowhere. There was no directional bias, and that was why it was very difficult to trade as of last week. Okay, so there was no trading opportunity in this thin market volume for the whole of last week, 5 days. All right, so that line has now been damaged. This line has now been damaged as price messed around it just on the line. So we are going to delete that. Let's keep it right here, keeping it at the obvious swing high right here. Okay, this level here belongs to the 4 hours time frame. Okay, I will not want to keep that in the daily time frame. It is not really significant in the daily time frame. It belongs to the 4 hours time frame. So do this level also belong to the 4 hours time frame. This one here has been broken down, broken up, so it is now useless to us. Okay. All right, so no further lines to be drawn in the daily time frame. Let's move into the 4 hours time frame. Now this is the 4 hours time frame. As you can see, price has been flat. Price has been moving sideways in that range. Price has been moving sideways, no clear directional bias. But like I said in most of my live session or market analysis, try to identify the market pattern that you are seeing in the chart. Is it a channel formation? No, it is not. Is it a triangle formation? Whatever it is. But from my view here, I would like to take this low to this one here. I can see how price has been respecting that line. Okay, price has been respecting that. Then there could be a possible line again from this top. Let's see that. We're going to take out this. Okay, can you see that? That's the pattern price has been trading off, and it's a very fresh one, very fresh channel. Price has bounced off that level for 3 good times. 3 times as what? Resistance. And price has been respecting this lower boundary as what? Support. So you shouldn't be clicking on your sell button against this level of support, because price is likely to react off that level and bounce back up again, trying to retest the upper boundary of this channel. Okay, for you to go short, you need to say clear breakout of that level, then you might begin to search for short opportunities, but if only your trading strategy says so. Okay, if this level is broken, for us, I am sure we do not have any trading strategy that supports that entry, so we might not be going short, except if we find a valid setup to trade in that direction. Okay, but for now, this is what is happening right here. That channel formation, this is a level of support. It is a low quality pattern. Aggressive traders will be looking to click on their buy button to probably ride another bounce of this level of support. That's for aggressive traders. For us, we are not taking anything here. It's a low volume market, so we will keep watching until we find a valid trading opportunity. Okay, that is it for the euro against the New Zealand dollar. In the 1 hour time frame, we can keep this level here as resistance. Don't want to keep too many lines, just delete that one. Okay, price is still bouncing off the lower leg of the 4 hours channel line. This is a key level of resistance. Okay, so if price is able to push above that level, hey, we'll be looking for us. We will have a valid market flow setup to look for long opportunities of that level. It's indeed going to be a highway free of traffic, so we will wait. For us, the plan on the euro against the New Zealand dollar, we are not interested in going short. We are only interested in waiting for the breakout to the upside, give us a pullback. Somewhere in there is where we want to search for our long entries in the euro against the New Zealand dollar. That is our trade plan. Okay. All right. So let's keep that. That is it. Nothing more here. The next pair is the New Zealand dollar against the Canadian dollar. Last week we were actually looking for a short opportunities with a short opportunity with this one. In the monthly time frame, we got a nice trend, nice uptrend here. That trend got broken. You can see how it got terminated around that area. Okay, even though price took out the previous swing high, that we adjusted that trend line to this, and currently price is respecting that level. That one there, we just adjusted it. Price is now bouncing off that level as support, but this is looking too weak for an uptrend. This is just a sideways price behavior. It is looking too weak for an uptrend, but this level here acted as support right there. Okay, right. So well, let's delete that. We already have this one covering up for that level, so it's the same thing. That area there covering up for that level as support. We are already aware of that level of support with that blue line. So to the upside, let's place it's just an area. Let's keep that level right here. It's quite difficult, but let's just keep it at the most obvious swing high here. Can also keep this one here. It's a range. It's a pity. It's been a very difficult market for the forex traders. Okay, it's been a difficult market for the forex traders as price has been sideways for some months. See that? That's the monthly time frame. Price has not been moving to any directional bias. Let's see the weekly time frame. In the weekly time frame, we are trading around an area of former support, which may now act as resistance. That area right here, you can see that price is challenging that area. This is not a good point for you to go long. Okay, you don't want to click on your buy button. It is important to begin to search for short opportunities from that area, because that is an area of former support which may now act as what? Resistance. That is what you should be looking for. Search for short opportunities in line with your trading strategy. If your trading strategy finds a valid setup and calls for a short entry around this area in the New Zealand dollar against the Canadian dollar, hey, that's a high quality signal and go short around that area. Okay. Now in the daily time frame, just a similar thing, but in the daily time frame again, there is something very important here. Price is trading around an area of resistance, a key level of resistance. Actually, Hector called for a trade signal here. I just logged in to see that. This was the pin bar, nice pin bar right there that we were trying to trade. But last week Friday we got a spinning top again. That was a spinning top for last week Friday. Another sign of exhaustion, telling us that the next candle might be a bearish candle here for the New Zealand dollar against the Canadian dollar. Much of hesitation around that area of resistance. Why? Because price is trading around not just an area of resistance here, but a possible point of confluence. Connect this bounce, this one here, that's a counter trend line. Let's try to do that. I'm going to use this level since the weekly line is already taking care of that. All right, let's connect that level. Can you see that? This one here coming around that junction, this one here coming around that junction. This is a powerful point of confluence, and this is an optimal area for traders to begin to look for short entries, placing their stop losses just a few pips above. All right, if price fails to push, kick your stop loss out, you know that trade has failed. But honestly, this is an area that most traders should be looking for short opportunities. Okay, do not click on your buy button against that level. You only want to do that if price has successfully pushed through, then looking for pullbacks for a continuation move. But for now, it is a level of resistance. You should be searching for short opportunities. Okay. All right, maybe a possible channel formation as well. Just keeping this. Like to keep that. If price bounces off that area, then we are likely to hit this next level of support. So that is more of a highway free of traffic. Considering this bounce, this one here, should keep that level. This is the upper boundary of that channel. So any bounce of this area, we should see price coming down all the way here. So this is a nice room to make some nice pips. All right, so New Zealand dollar against the Canadian dollar. Search for short opportunities. Let's move into the Forex time frame. In the Forex time frame, quite a messy chart, not a clean one at all. What levels can we keep here? I'm going to delete this green line, taking this one here off that level. I don't want to overstuff this chart. Sorry about that. With too many lines. This one's the daily time frame. To be more specific with this level, you can see those harmonic bounces. So keep this one here and see those harmonic bounces right here. Okay, so let's keep that one. I wouldn't want to keep this a trend line. There is no valid trend. This is just a whole lot of market confusion here for the whole of last trading week. Let's see the daily time frame. In the daily time frame for the past 1, 2, 3, 4, 5, the market was heading nowhere. Price was just flat. If you trade in this type of market condition where price is heading nowhere, your stop losses are likely to be hit. It is quite difficult to trade in this type of market condition. So in the 1 hour time frame, take out this. Let's keep Friday's low. It's a nice level. Keep that one. Nothing else. This is a messy chart in the 1 hour time frame, probably because price is trading around the daily level of resistance. So keep your eyes in the daily time frame. Search for possible bounces of that area for price to come back down. That is it. Just in the daily time frame. In the 1 hour time frame, there is nothing really. Before you want to go short, you want this key level of support to be broken, a pullback for a continuation move. All right, let's move on to the next pair very quickly. The New Zealand dollar against the Swiss franc. Let's see the monthly time frame. Monthly time frame, price has been also in a range there. No clear directional hint for several months. Very difficult market condition for forex traders for the past years. Okay, few years. In the weekly time frame, we can keep this a double level of support. That is a clean one, good level of support. Actually, we might. Okay, we are very likely. Let's foresee a flat bottom triangle. We are very likely to find a flat bottom triangle in the New Zealand dollar against the Swiss franc. Let's keep that. You can see that this pattern, there was a pattern here, a triangle formation. It came to an end. We saw another one here, a channel formation. It came to an end. We saw another one here, like a small push to the upside, but the beginning of that flat bottom triangle. Let me see that. Might be a flat bottom triangle. Okay, so the New Zealand dollar against the Swiss franc here. this is an optimal area for aggressive traders to look for short entries. Okay, it is an optimal area. Aggressive traders might be clicking on their sell button right here. Stop loss just a few pips above, but it is not yet right for us. For us price action traders, we want price to break this key level of support right there. That is where we'll be looking for our short entries. For now, we are going to watch this this possible flat bottom triangle. It is a possible flat bottom triangle because the bounce here is not yet confirmed. Only if price begin to move away from that area that we will confirm this as a flat bottom triangle. But for now, it is very likely that we are going to see a flat bottom triangle in the New Zealand dollar against the Swiss franc. All right, this level, let's say that in the daily time frame. Daily time frame, delete this one. Let me be more precise with this line. Okay, weekly time frame. Okay, daily time frame. All right, now let me show you what's going on here. Price is making some deceit around this area. Okay, it's making some deceit around this area. No doubt this is an uptrend. It is a kind of trend, but more in a channel format. Okay, whenever this channel breaks, price is likely to go back down. Now look at the candle for Friday, for last trading week. That is a nice bounce, isn't it? Very nice bounce off that key level that has been holding price, but it is a low quality bounce. We are not interested in taking this trade, and we do not advise anyone to take this trade. That's because of the kind of price action that we found for the past 5 days. That's last week. Okay, past 5 days, 1 2 3 4 5. It's a market that has been in congestion, so if you take this candle, it is very likely that it's going to be problematic. Okay, it could go in your direction, but the hints here are that it's a low quality setup, so we are not interested in this. Okay, all right, what we are seeing is that in the weekly time frame is a possible flat bottom triangle, so price is likely to come back down. So we're not interested in searching for long opportunities at that level. It is quite risky. As you can see in the weekly time frame, that could be a possible level of resistance for price to bounce back down. All right, so we are going to keep monitoring this line. What we want to see is a breakout, a pullback to go short. We're not interested in going long. In the 4 hours time frame, look at the congestion I was talking about for 1 2 3 4 5 days. That's the whole of last week. A week that wasn't really tradable for us. I would like to draw that congestion in the 1 hour time frame. We can connect this high. It's difficult to draw, but let's keep it more as a flat bottom triangle on its own. Let me take out this. I want you to get that picture. More as a flat bottom triangle as on its own. Well, it can even be this. This one is not leaning too well. It might even be that. Can be this. So we are hopeful that if we find a momentum filled week, if price is able to break below this double level of support, then we will have a good setup to look for short opportunities right here. This is not a good area to go long. Do not. We are having the bias, a bearish bias in this pair. Okay. Right. So that is it for the New Zealand dollar against the Swiss franc. All right, the New Zealand dollar against the Japanese yen. This is one trade, one pair that we were involved in, trapped within that range. As you can see, that's the entry right there. The stop loss is just a bit above this range. Okay, That's the stop loss right there. For those of you who have been following these reviews, you are aware of this trade. A price came into some profit right there, found support there, went into some losses right there, excuse me, came back to break even just around the entry right here. Okay, we are still very fervent with that directional bias. Let's look into the weekly time frame. In the monthly time frame, in the monthly time frame, price has been in the range. That's the range right there, and it is currently trading around the upper boundary of that range. So this is definitely a good area to look for short entries. Let's see the weekly time frame. In the weekly time frame again, a possible, very possible flat bottom triangle that we might be seeing here. Very possible flat bottom triangle as well. Let's just keep that level. Keep this one here. Like I said, it's a long-term trade, so we are expecting price to find resistance around that area. So as you can see, that is a proposed flat bottom triangle. Like I said, it was an aggressive entry. So if price finds resistance around that point, it has a highway free of traffic to push to the downside. That is why I'm not really bothered about this trade. I am going to let it run for as long as it takes. This is a highway free of traffic. Price is likely to cruise back down. Okay. At any rate, if price pushes up to hit the stop loss, well, that trade will come to an end. It is a bad one, but for now, give it a fair chance. The actual trading direction is just beginning to happen. You can see last week candle was an exhaustion candle, a rejection bar. The bears were ready to reject any further pushes around that area. So the next candle might be a possible drop to the downside, and by then we are likely to be in some nice profit. Okay, so let's keep this. That trade is still running. In the daily time frame, you can also see that hesitation. Price is really tired, couldn't push any further. For the past few days, price has been sideways. Unfortunately, all of this sideways market behavior happened for this last trading week, so it's been very difficult for us to trade. If you look at the 4 hours time frame, price has been sideways. In this type of quiet market, it is hard, very hard to trade the market successfully. Okay, all right, well, let's just for the sake of simplicity, keep this level this way. Let's just keep it here. Quiet markets are the most difficult markets to trade. All right, so that's a range. In the 4 hours time frame, price action is still looking bearish. For those of you who are familiar with the breakout pullback, a continuation pattern, you can see in the 4 hours time frame we got that solid breakout. We have seen the pullback. We are likely to find the continuation pattern. So keep that trade running, as we still have all of this room for price to push to the downside. This is not the time to close the trade. Everything is already working in our good, in our favor, in our best interest, so just keep that trade running. In the 1 hour time frame, nothing really, flat for the entire week. Okay, all right, now let's see the Australian dollar against the New Zealand dollar. Let's begin from the monthly time frame. Price is also looking like it's in a flat top triangle. You can see that key level there as resistance, and this rising level here as support. So it's actually in a flat top triangle, more of a reversal formation, a key reversal formation, a nice crash to the downside, flat top triangle, breakout, pullback, reversal. That is what is likely to happen in the very long term of the Australian dollar against the New Zealand dollar. But those long-term traders are actually waiting for this key level of resistance to be broken. That is what long-term price action traders are waiting for. And as you can see, for several months, count the number of candles here. Remember, 12 candles makes 1 year. So you can see the type of market condition that forex traders have been through. Really horrible one. Market is not moving to any directional bias. Within this range, the retail trader like you and myself, Hector himself, we are all struggling for little pips within this range, and as a matter of fact, it's not been easy making profits within that momentumless market. All right, in the weekly time frame, what are we seeing here? Really nothing. You cannot draw a weekly line here. Maybe we can keep this counter trend line, but it's just too far away. Let's just keep it, since we have to keep a line in the weekly time frame. You can see how price has been bouncing off that area, so we can just keep it as a counter trend line. So the next time price pushes to that area, we know we have some level of resistance. All right, nothing else in the daily time frame. This area here has been acting as a support. Okay, it has been acting as support, so we can keep that one. There is also a likelihood of a flat bottom triangle. Okay, but this flat bottom triangle quite looks odd, but we can keep that. Otherwise, I will be reading price action based on maybe this type of behavior. Let me see. Let me just take off those lines and see. Let me see this, if it's actually true. Quite difficult to analyze, but for now, let's just keep it this way. Okay, zoom in this chart a bit to show you what's been going on. Since we had a rejection candle of that line, that level that has been acting as resistance, well, this rejection candle looks good, and it might push to the downside. Okay, it has the probability to push to the downside. But hey, look at the entire 5 New Zealand dollar pairs that we have analyzed: New Zealand dollar against the American dollar, euro against the New Zealand dollar against the Canadian dollar, New Zealand dollar against the Swiss franc, New Zealand dollar against Japanese yen. Those 5 pairs are telling us that the New Zealand dollar is about to go weak. Okay, it's about to go weak. So one is just telling us that the New Zealand dollar is about to gain some strength here. You have to be very apprehensive of that. You have to be very hesitant taking this trade. Okay, well, I cannot really predict the market. This might push to the downside, but hey, the risk is too much. We are not going to take that. For Hector, we have multiple pin bars. That's 3 pin bars right there at that particular area for 3 days. So we are not trading there. We want to see price move up. The most we want to see are 2 pin bars. 2 pin bars. Anything way more than that, we will not take any trade there. Okay, so here 3, we are not interested. Price is likely to push down, but somewhere around in here, be very careful, it can turn back up. So for the Australian dollar against the New Zealand dollar, quite some market confusion there. Let's see the forward time frame. In the forward time frame, what can we do here? Let's draw this level here as support. That's the level of support. I want to change that color to green. Okay, now in the 1 hour time frame, we have a double top. That one there, this one here. Okay, let me take off that red line so you can get a clearer picture of what I am talking about. That is it right here. Let's keep this within the hourly. Okay, now this is more of a flat top triangle. Okay, so if price is able to push above, we have the green light to look for valid bounces to the upside. Now the daily time frame is calling for a pin bar for a possible downward push. Now if you place your sell stop order just below that pin bar. Remember, this is the pin bar itself. This daily box indicator represents the pin bar. So if you place your sell stop order just below that pin bar, you are placing that order against this level of support, just against that support. Don't be surprised to see price come back, trigger your entry, then begin to push to the upside. Okay, that's one thing you need to be careful about. We will have to wait to see if price breaks this flat top right here. Then we'll be searching for long entries. For last week, price was flat. It was a non-tradable week. We are not going to force anything, so we were just flat watching the market, hoping that things will get better. All right, the next one is the American dollar against the Canadian dollar. Let's see the monthly time frame. Monthly time frame, price has the potential to come down. All right, it has the potential to go down. We have been analyzing this for several months, where price actually was very mad with us. We took some entries around in here, somewhere in here. Price went far against us, sideways, came back to some of our entries. Well, the directional bias for this pair still remains to the downside. I think I saw something here. Let's fire in the 3SM indicator. You will see that this is the first bounce of this 3SM indicator, and it looks absolutely nice. It looks really nice. You can see the 3SM is in themselves pointing parallel to the downside, calling for the downtrend. Whatever we are seeing here is just some hesitation. Anywhere here, that trend might resume. So be very careful clicking on your buy button when trading the American dollar against the Canadian dollar. All right, in this weekly time frame, price is still making that pullback. I am following this pair very closely, and I am waiting around somewhere here. Price is still making that pullback to that zone where we'll be looking for our short entries. Okay, so we're expecting some pushes again to the upside in this upcoming trading week. So the directional bias for this week is likely going to be to the upside. It's likely going to be price pushing to the upside. This is that area of resistance we're talking about, and you can also find another one right here. That swing, there's an area of resistance there. So if price is able to come up somewhere in there, we find that valid reversal candle, hey, we'll be clicking on our sell button for price to come back down. All right, so nothing much in the daily time frame here. Again, let's see the 4 hours time frame. In the 4 hours time frame, we got more of a flat bottom triangle. The Canadian dollar interest rate announcement was released last week. We saw that chaotic price behavior there before price started pushing again. This flat bottom triangle from the long term might not break to the downside. That might not happen. What we might see is a break to the upside, retesting that area of resistance before they fall. So be careful clicking on your sell button in the American dollar against the Canadian dollar. The 1 hour time frame was a mess for us for the whole of last week. You can see price just flat. Nothing really happened. You cannot trade in this type of market condition. All right, the sterling pounds, I'm sorry this review is taking too long, but it's been long since we made the last review, so let's go through these pairs in a more accurate fashion. If you are tired, just shut down the video and walk away. For those who are interested, keep watching. All right, the sterling pounds against the New Zealand dollar, the monthly time frame, price is actually turning to the upside. More bulls in here. You can see that early trend formation. All right, early trend formation. Price is likely to still keep pushing to the upside. It's important to search for long opportunities. As price action traders, we are watching this key level, this one right there. In fact, we are watching current candle for a possible hint for buy entry. You can see we got the breakout. This is the breakout there. This is the pullback, and we are now seeing the bounce pattern right there. Okay, more or less a full swing reversal. So let's wait to see how this month candle close. That candle right here is what we are watching. Okay. All right, at any rate, the pair is sitting at a level you should not be clicking on your sell button. You should be interested in looking for more long opportunities. But in the weekly time frame, it's been a tug of war. It's been a sign of market confusion. Several pin bars for several weeks. 1, 2, 3, 4, 5. 5 weeks in a row. Price has been really bad, moving sideways. No clear hint. In the daily time frame, we are anticipating this channel formation. All right, price is likely to push up again to that upper boundary, but the market volume for last week, look at 5 whole days, was just too thin enough for forex traders to trade the market more profitably. All right, in the 4 hours time frame, that sideways behavior, nothing really to trade here, nothing really to talk about. We can keep this level here as the next level of 4 hours resistance. Let's change that to green. The 1 hour time frame, quite a difficult one. I wouldn't want to draw any trend line here, but let's just keep this level for now. Those levels. Bad market condition, sideways, push up, sideways, really bad market condition. Not in here, but be careful as we are looking for further pushes to the upside. The Australian dollar against the Japanese yen in the weekly time frame, or even in the monthly time frame, a price is trading around our weekly level of resistance, that area of resistance. And I have often said we should be careful going long with this pair. Even in the weekly time frame, let me take out these levels. Let me keep this in the weekly time frames. We had anticipated an early channel formation. As you can see, price bouncing off those levels for a possible resistance zone right there. Okay, so price might bounce off that level, coming back down. Remember, we are dealing with ranges here, so be careful trading long around that area. Price is likely to come back down. In the daily time frame, we are finding the point of confluence around that point. This is an area of resistance coming around here. No sign of rejection yet, but we are still watching this level, this area, to see if we can find any possible rejection sign to go short. So the Australian dollar against the Japanese yen is likely at an optimal area to look for short opportunities. So let's wait to see what's going to happen at that level. We are bearish with this one. We are not interested in searching for short entries. In the 1 hour time frame, let's keep this key level. It's a level of intraday support. Bounce there. If that level gets broken, price might be pushing to the downside. We'll also be watching this level of 4 hour support, but it's quite a very choppy market. We need some solid breakouts. All right, the sterling pounds against the American dollar in the monthly time frame, price is actually trading around a level of former support, which may now act as resistance. That is not a level you want to hit your buy button. You really do not want to click on your buy button around that level. You should be searching for short opportunities. In the weekly time frame, possibly the same level that we were talking about, that one right here. Okay. Also, if you try to connect these highs, these ones here, you will see that price might also be finding a counter trend line as resistance. Let's connect that. Okay, so that is it. That bounce right there, this one here, any further pushes there, price might face resistance and turn back down. So that is not an area to go long. You want to be careful clicking on your buy button around that zone. In the daily time frame, price is already finding some rejection around that area. Be careful clicking on your buy button. Let's see the 4 hours time frame. Messy market for the last week. 5 days, the past 5 days was not really good for us. Range there, another range right here. Nothing to trade here, just be careful. Price is trading at an optimal area of resistance. There is no sign. For us, we'll be looking for short opportunities. And finally, in this review, the euro against the American dollar. Well, the bullish push as of last week that we expected didn't quite happen that much. In the monthly time frame, nothing going on much here. In the weekly time frame, we expected some solid pushes to the upside, but last week was a rejection candle. You can see that nothing really happened much. Let's see the daily time frame. In the daily time frame for the past 5 days, see what happened. Nothing much. So looking at this hesitation here, you could possibly find that channel formation. It is even obvious from the daily time frame. So just moving to, before we go into the shorter time frames, let's keep this counter trend line. Let's keep this counter trend line. That's also another level of support around that area. Let's just keep that. It doesn't look good, but let's keep that. Okay, price respected it as resistance twice. All right, so in the 4 hours time frame, let's see if we can figure out our channel formation. That's the upper leg, this bounce here, this one here. Let's keep the lower leg and keep these bounces. Let's say the low for that other thing. Okay, so that is it. Channeling around that area. It doesn't look good, but the next directional bias might still be to the downside, somewhere in here, before we might find resistance for price to push to the upside in the euro against the American dollar. A very bad market condition, but actually there is nothing we can do about this. Okay, if you must trade this pair, be looking for short entries for price to come back down somewhere in here before another push. But it's not quite clear to us. We are not taking any trade here for now. This is a totally bad market condition and we are flat in this pair at this time. Okay, all right, thanks for watching these reviews. I hope you enjoy it. Don't you worry, we are going to have best of reviews coming in the future. We are trying to put some things in order. We are still setting the live trading room. We are still setting the website, making some little changes here and there. I know the start for this year haven't been palatable, but don't you worry, things are really going to get better. Okay, thanks for watching. I will be talking to you again the next market reviews, let's say over the week. But if you have questions regarding this review, please post them in the live chat window or even in the Telegram group, and we can discuss everything there together. Okay, for now, do enjoy your weekends, as we'll be seeing you again for buyer next week. Bye for now.